Hi everyone, I'm Ken from Crypto Trading. Twice a day, 7 days a week, I examine the price action of crypto. I share my knowledge as a full-time crypto trader to assist you to be more of a financial blessing to yourself and those you love. If you're new, welcome, and welcome back to our regular community. Everything I do for you is free. Let's have a look at the crypto market. Let's run the numbers. Bitcoin is currently trading down about 8.2% at 31,763. Ethereum down about the same, 8.4%, trading at 1811. We can see the stable coins are green. There's also a little bit of green in the market. When the stable coins are green, it means money is flowing out of Bitcoin, Ethereum, BNB, DOGE, ADA, XRP, all of the cryptos, in the majority, into the stable coins. It's sort of just parked there, waiting to come back into the market. I'd like to share Rule 912 with you. Weekends are volatile. What you will see, many in the community have reached out and said, why does the weekend always sell off? Why is it so volatile? The reason is that people can easily get spooked by negative news and act in opposition to their financial best interest. We'll go more into that later on, but I think it's just very good to know that the weekends are typically volatile. They can be volatile to the up and to the downside, so they're not always necessarily negatively volatile. Please keep that in mind too. Let's have a quick look at Bitcoin news sentiment. So positive, offers a windfall, properties is just neutral, Paraguay to make it Bitcoin legal, maybe not, negative, MicroStrategy, not concerned, positive, El Salvador, about money laundering, negative, Elon and Jack going at it again, just call that one neutral, market wrap, Bitcoin declines, negative, positive. This is quite negative. So Guggenheim, Scott Minerd, is saying that Bitcoin could sink to $15,000. You can imagine if people took the news seriously, they could look at this and say, oh my goodness, this guy is so fantastic. He's got an enormous amount of credibility. I must sell. We looked in the last episode at the Wyckoff patterns, and there's a couple of patterns that are key. Wyckoff was all about protecting the retail investor from the big end of town. It was a very, very interesting analysis. You might like to look back at that particular episode. That particular episode is here, episode 81. In that particular episode, it's a little longer because I spend quite a bit of time trying to explain what things actually mean. It's not about terminology, it's always about understanding. We can tell the news sentiment is basically 4 positive, 4 negative, and 2 neutral. We'll say that it's basically sitting in the middle, neutral. Dinesh shared his insights for the last video and talked about how he's getting value out of the particular rules. The key thing, when I used to lecture first and second year stats, I was very focused on my students understanding what things actually meant, what it was all about. I wasn't interested in teaching them advanced statistical formulae, and I wanted them to know how to use it in real life. Everything I do here is for that reason, and Dinesh very accurately picked up that was my intention. Well done, Dinesh. Rule 132, we see what we expect, is an incredibly important rule. He said many times he's just wanted to see his reality play out, and then he realizes the market is largely uncontrollable and it does what it wants. Let's just go into this one a little bit more deeply. You may have heard of Maslow's hierarchy of needs. He's actually the one that invented the statement, when you have a hammer, it's likely you see everything as a nail. I really love this cartoon because I think it really captures the concept. The hammer is here about to whack the nail, and the nail says, "No, hammer, no, wait," because it's not a nail, it's a screw. It needs a screwdriver, not a hammer. The issue is with everything in life, the more things that you have, the more different things that you have in your toolbox, the more capable you are of actually creating the right solution for something. All tools have their purpose. All tools are important. Elliott wave theory is important. Wyckoff distributions are important. Fibonacci levels are important. Price action, that's important. Technical indicators, they're important too. What I found after many, many years, decades in the markets, is you tend to just embed all the different tools in terms of price action. That doesn't invalidate anything. As I've always said, everybody needs their own edge. Whatever your edge is, if you are consistently profitable, you're a legend. That is all that is important. No one can say you should do this or you should do that. Nobody should do anything. You do what works for you, whatever that is. We've shared Rule 171, zoom out before, but it's particularly important on days like today. Let's have a little wander through Bitcoin's price action. This is going down to 2012. It's very interesting to see Bitcoin and what it can do. It surprises a large number of people. This is on a linear scale, not a log scale. You can see these big ups and downs. It is a very volatile asset. That's why we always say, please be careful. It is volatile. Just have a look at how it acts. Up and down, price moving in a wave, getting black swan events. Look at it. This is what I want to show you. When you look at, this is inside the KS model, which you will probably recognize by all of these dots. The KS model is a real-time trading model. It's not an abstract piece of information. You can see this big short down here, which hammered in a bottom. It's very interesting to see how price can do things that you just can't believe coming from any other particular normal market. Bitcoin is an exponential asset. What that basically means, it does exponential things. Just be aware of that. That's why we look at everything on a log scale. Look at the difference between log and linear. Quite a difference, isn't it? Rule 8 is exceptionally important. Market context dictates trend. Now, what does that mean? I measure market context through the KS model. Remember, what you just saw was this little part down here, just this part, just on fast forward. It was pretty cool, wasn't it? When we talk about price psychology, I'm not talking about retail psychology. I'm talking about institutional psychology. Many people have said, oh, we're in a bear market because we've come down so much in price, it's all over. That's retail psychology. Institutions manipulate retail psychology. Ask the question, how could they do that? What channels would they need to use? Could it be the news? Could it be something that reaches you? How else do they talk to you indirectly? They have to notify you. That's why I always say, when you watch the news, please watch the news with one eye closed, one ear closed, and try and fact check it. It is really, really important. The deeper you get into markets, the more you understand institutional psychology is not there to help you. Now, why would I say that? When money enters any market, there's a zero-sum gain. What actually occurs is the institutions make what you lose. If the institutions are making money, it's because retail has lost money. It's a very, very important concept. When you see a lot of losses, you can be assured the institutions are doing quite well. They're accumulating. They're the ones with the power to move the market. It's just really markets 101. It's incredibly important to understand this. Most importantly, why would institutional psychology be positive? Why would the institutions be expecting higher prices? What would that be about? Let's have a look at this technological adoption curve. This was internet growth. I tend to show this each episode because it's so important to put these ideas in your head, because if you understand the long-term structure, if you have a market growing 80% per year on average, that is a really profitable market. Of course the institutions are going to push the price up. There's no reason for them not to. Let's turn to Bitcoin technical analysis. Episode 80, we were just up here at this particular price. Bitcoin has traded down to 31,631. I mentioned that if it traded to 32,414, it would be okay. We've seen that it's actually gone below that. That means a lot of shorts have entered the market. Now, how do I feel about that? I gotta tell you, I feel really positive. What concerned me with this move in here, was the shorts exiting the market. The shorts got shaken out of the short trade. What happens when shorts cover is that they actually drive the price upwards because they sell and they buy back to cover their position. They kind of lock in the sale price first and then lock in the buy price when they exit a trade, which is the absolute opposite of what normal traders do. They buy and then they sell. Shorts do the exact opposite. When you have a lot of shorts getting liquidated, what happens is price exponentially moves up because they need to liquidate at market. And that's why often we say sharp angles reflect. This kind of price behavior is very representative of a lot of shorts entering the market. But let's check that out. Okay, as we anticipated, there's been an incredible uptake in short behavior. This is actually incredibly positive. Why is it positive? It's positive because what is actually happening, there's always a yin and yang. The shorts and the longs are opposite sides of the same coin. The shorts profit, the longs profit, just at different times, but they work symbiotically with each other. What we see here is a liquidation of the longs, drawing the price down. Now we know it's the weekend, so we wouldn't expect very big liquidations on this sort of move. Maybe 600 to a billion would be the absolute most, but it's the weekend, so I would be expecting maybe half of that. Let's check it out. Let's see what's happening. Okay, the 24-hour liquidation is around $480 million. 96,606 traders were liquidated. This is coming in line with the fact that trading volume is typically light on the weekend. Let's just change this to the past 12 hours. So the past 12 hours, 72.33% of liquidations were long. Now let's have a look on the 15-minute. We see a lot of long liquidations that push the price down. Now we're starting to get a degree of consolidation. Let's have a look at psychological safety and liquidations. Here we have extreme fear coming in today at 20. It was 27 the day before, 22 the day before, 14 and 10 the day before that. You notice these extreme fear bars. When it gets to a very high level of extreme fear, I put these down so that you can better understand. When we talk about extreme fear, we're talking about, of course, retail fear, not institutional fear. Institutions inverse this graph. They feel fear at the top as the price is going up because they want to sell. They're afraid it's going to reach a maximum level. And it's really important to understand that there are many institutions selling. They're all vying for a particular position. Not all of those positions get filled. So when institutions come up and start to sell down, they will typically seek to retest this high, that high. That's why when you get a sharp sell down, they're often very valuable opportunities to buy in because of the retest of that. If it retests, they will try to do it again until it fails. Then that signifies a downward movement. Let's do some technical analysis. It would be good to have a look at Bitcoin, Ethereum, BNB, ADA, DOGE, and XRP. Let's go for it. First of all, we always start off with total crypto market cap. Why do we do that? It's like zooming out. If we zoom into just your beloved coin, you tend to lose context of what the market is doing. This is like a mini KSModel. We just need to understand how price is tracking. I mentioned in the last episode that there is a good degree of structural support here. If we combine the fact that it's a weekend, and weekends are volatile, and there's a negative news comment of about $15,000 Bitcoin, which could spook a lot of retail hands out. With that in mind, I'm really not too concerned about this. This is more like, as I see it, just by price action, that's a low, that's a low, this is a higher low than that. We could be actually witnessing a higher low. With that in mind, we could be seeing something like this. Let's have a look and see how it plays out, but that's a probabilistic move. Let's start off with Bitcoin. Even though we did this previously, let's just have a look. Let's assume that we're actually getting into a lower high position. That will become fairly evident if we start to break underneath into this zone. Not this zone, because that's just wobble, but if we get into this zone, that will be something else. But we can see that there's a large degree of structural support. So if we talk about total market cap and we talk about Bitcoin, it's reasonably healthy, and we know the price is always moving in a wave, up and down, and we would expect an up wave. Let's go across to Ethereum. Ethereum is currently trading at 1825. It has support below at 1794, resistance immediately above at 1855. It also has resistance at 1909 and 2020. Let's have a look at Binance Coin. Binance Coin is currently trading at 282.96. It has support below at 278.17 and a good level of structural support at 264.75. It has psychological resistance at 300, and the first level of real resistance is 309. ADA, Cardano, is currently trading at 2662. It has a good amount of structural support just below that number, which is quite good, at 124.11 and at 121.27. It has resistance above at 128.48 and also above that at 133.43. Dogecoin is currently trading at 24.429, trading quite extensively in there. It has a level of support below it at 23.393 and also at 22.200. It has a level of resistance above at 24.892 and 25.735. We can see that Doge basically came up to the resistance level, the structural resistance, and backed off. And we can see that it's actually being supported by this particular support channel, which is actually quite a good thing. The reason it's good is that's because it's held this line. It would be bad if it sliced through it and kept on going. Let's have a look at XRP. XRP is currently trading at 61.85 with the support below at around 60 cents. It has really major structural support from 56.94 below. There's a potential for a bounce here. When you get into a lot of structural support, price tends to react because there's no one left to sell. They're going to get in there and buy. XRP's resistance above at 65.60 and 67.40 is underneath that structural resistance line, which is just a much stronger resistance line. It will come into play at around 77.37. A few community members asked me to cover Polkadot, so I just want to do that to help them out. DOT is currently trading at 14.595, pretty much at support. We notice this down channel of resistance. We could expect it to magnetize, DOT's price to magnetize towards that and try to take out the 16,441 mark. But this is becoming quite strong. So we would really be looking to Bitcoin to see Bitcoin breaking out, and then DOT will take out this resistance without any problems. DOT has support below at 14,023 and below that at 12,911. It also has resistance. The next real major resistance above is 18,321 when we get above that resistance line. Let's have a look at Solana. Solana is currently trading at 29,420. It has support below at 28,567 and support below that at 27,439. Resistance is above at 31,604 and 32,464. It's good to keep on thinking in your mind, price is always moving in a wave up and a wave down. Sharp angles tend to reflect, they don't always reflect instantly, but they tend to reflect going up and down. When you have a big down movement, you can expect a big up movement. You can see how this V in Solana has almost played to a T in the sharp angles reflect. Tending towards the sharper the angle, the higher the probability of a reflection. It's really quite fascinating. Let's have a look at MATIC, Polygon. Polygon is currently coming up to some quite substantial structural support. It's currently trading at 1,06738 and has support at that level, structural support at that level, which means strong. Underneath that, it also has structural support at 1,01203 and at 0.95360. Don't forget also the psychological $1 mark will be important. Let's have a look at Vechain VET. Vechain currently trading at 73.67, just above support at 71.31 and resistance at 75.24. There's a more major resistance at 80.45. Let's have a look at Terra, Luna. Luna is currently trading at 5,220. It has support below at 5,009 and support below that at 4,781. It has resistance above at 5,586 and also at 5,920. This is quite a community favorite. Just want to pop that in to help people out. Let's go across to the derivatives, Binance derivatives. 24-hour trading volume is $80.9 billion. 24-hour open interest is around 5.05 billion. The change in the price of the contract in the last 24 hours is quite red on Bitcoin. There's a degree of green coming through, which is good, but I would expect, just on the market sentiment at the moment, for things to be reasonably negative. It is good that we're not witnessing all the coins going double-digit negative. Not much green in the market at the moment. These just futures. It's always a really good idea to keep our eye just in terms of a trading diary or journal, so that you can come back to any particular point in time and just find the episode that suits and understand the price action of that. We can see that the top 7 are Bitcoin, Ethereum, Tether, BNB, ADA, DOGE, and XRP. Let's have a look at the 24-hour greatest percent gainers: Celo, Quant, Decred, and stable coins. We know stable coins signify market corrections. Let's go the other way. 24-hour percent losses: Rune, Bake, Near, Kusama, Phantom, CRV, and MATIC. Let's have a look at the 7-day greatest gainers: Celo, Quant, UST, and then it's pretty much negative. Let's go the other way. 7-day percent greatest losses: Kusama, Near, Bake, ICP, Rune, DOT, and AMP. I do these videos to assist you to be more of a financial blessing to yourself and those you love. I hope you found the content useful. Please reach out and say hi and let me know where you're viewing from, and if you have any questions. Our community is really helpful and supportive, and I always do my best to respond to. If you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe to YouTube and follow me on Twitter. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.